So it's finally happening. Something millions of would be home buyers have been praying for. Mortgage rates, stuck at their highest level in years, could be about to plunge, and sooner than anyone ever expected. And the source of this bombshell prediction? Fannie Mae, the housing finance giant, is now signaling a seismic shift ahead. So if you've been holding off buying the home because of a punishing 7% interest rate, pay close attention because the outlook just did a 180 and it might make your dream home affordable again. So let me ask you this. Would you jump back into the housing market if 30-year mortgage rates suddenly fell under 6% for the first time in years? Good question. So, welcome to the Financial Freedom Network, the financial channel that fills your wallet, makes you money, and boosts your credit. So, before we take a deep dive, hit that like button and subscribe to get notified when we produce another video that affects you personally. I promise you'll appreciate it. So, buckle up and let's plunge straight in. So, just a few months ago, experts were convinced that mortgage rates would stay sky high when the Federal Reserve began cutting interest rates in late 2024 after years of hikes. Economists predicted mortgage rates would finally ease, and some even expected 30-year rates to dip below 6% by the end of 2024. And it made sense. Fed rate cuts should bring mortgage relief, but the reality had other plans. Persistent inflation and economic uncertainty kept mortgage rates stubbornly elevated well into 2025. In fact, the Fed's first rate reduction in September 2024 didn't stop mortgage rates from hovering in the mid 6% range. And by spring 2025, the average 30-year fix was still around 6.8, a far cry from that 6% or under. Now, Fannie Mae's forecasting team has been riding this roller coaster along with the rest of us. They've repeatedly adjusted their projections to account for the Fed's moves, inflation trends, and market volatility. In fact, at one point, as inflation and recession fears grew, forecasters even warned rates could hit the upper 6 to 7% range this year. But now the tide is turning. So, after months of doom and gloom, Fannie Mae just released a dramatic revision to its outlook, one that's a lot more optimistic. The bottom line? Well, mortgage rates could finally be headed down in a meaningful way. And that U turn has huge implications for anyone itching to buy a home or to refinance. In its May 2025 Economic and Housing Outlook, Fannie Mae dropped a bombshell. They now expect 30-year mortgage rates to fall to about 6.1% by the end of this year. And here's the good news, down to 5.8 by the end of 2026. And that, my friends, is a sizable downward revision from the earlier forecasts, which had rates staying closer to 6.6% or even higher. So, in other words, Fannie Mae is finally predicting below 6% mortgage rates on the horizon. And that's an encouraging sign that relief is in sight for buyers. And it's not just rates. The improving interest rate outlook led Fannie to boost its home sale forecasts as well. They now project a 4.92 million home sales in 2025, up from 4.86 million in the prior forecast. The translation, well, it's lower rates equals more willing buyers equals a livelier housing market. So, why the rosy outlook now? Well, a few factors are fueling Fannie's optimism. Economic conditions have brightened a little bit. GDP growth for 2025 was revised upwards, and inflation is slowly easing. Housing inventory is also creeping up in many areas, which takes the pressure off prices. So, with more homes on the market and the Federal Reserve signaling only modest rate cuts ahead, it seems the worst case scenarios are now off the table. Now, to be fair, folks are still wary. That index is below where it was a year ago, but a little uptick in optimism suggests that buyers are starting to believe better days are coming. Now, all of this might be enough to restore some confidence in the market. Imagine hearing that mortgage rates are headed back into the 5 to 6% range for many sideline buyers. That's the green light that they've been waiting for. Now, home buyers may finally see rates dip under 6% in the near future, giving the reassurance needed to nudge those who've been sitting on the sidelines. Fannie Mae itself noted that the latest rate forecast could actually help thaw the market and spur more home purchases. And it's already happening. Mortgage applications for refinances and purchases are starting to tick up as people sense a real shift is coming. So, real quick, if you find this info eye opening, do me a favor, smash that like button and subscribe to the channel. We're digging through breaking forecasts and financial news to show you how it directly affects your money. The more folks who join the network, the more people we can help navigate big changes just like this. And nobody will be caught off guard by the next housing shakeup. So thanks for your support. Now back to the update. Now here's the wild card. Even if mortgage rates fall, what about home prices? Well, the good news is that the balance of power in the housing market is swinging to buyers in a way that we haven't seen in a decade. There are currently far more sellers than buyers in the market, actually, roughly 34% more, according to Redfin. In fact, at no other time since at least 2013 have sellers so outnumbered buyers like this. So, in plain English, it's a buyer's market for the first time in years, and growing inventory means buyers have negotiating power. Redfin economists predict that home prices will actually dip. Sure, they are saying it's a modest decline, but a big shift with the relentless price climbs over the past few years. When sellers are competing for a smaller pool of buyers, prices tend to soften, and that's exactly what we're starting to see. More price reductions, longer days on the market, and sellers becoming more flexible on terms. So if you've been frustrated by insane home prices, this could be your moment. So with lower rates and a slightly lower prices, buyers who've before been priced out might finally be able to jump in. Remember during the pandemic frenzy, buyers had zero leverage, but today they can ask for repairs, contingency, even price cuts, and many sellers will listen. Three-quarters of prospective buyers say they've been holding off until both mortgage rates and home prices come down to reasonable levels. And that convergence, well, it's getting closer. So, for the first time in ages, buyers hold the cards. As one report put it, there are about 500,000 more homes for sale than there are buyers right now. That oversupply is forcing sellers to get realistic. We're already seeing some of the steepest discounting and home pricing cuts since 2013 in many areas. Now, here's a quick reality check. Real estate is local. Not every city will become a bargain hunter's paradise overnight. Some regions, particularly parts of the Northeast and the Midwest, still have hot demand and tight inventory, so prices there may not fall very much. Meanwhile, many Western and Southern markets, which saw huge run ups, are now seeing the biggest surge in inventory and therefore the biggest cooling in prices. So, keep an eye on your local market conditions, but nationally, the trend is clear. The scales are tipping towards buyers. Now, if Fannie Mae's rate predictions hold true and rates slip towards 5 to 5.5% next year, well, that could be the final catalyst to break the housing gridlock. Sellers who've been stuck may finally relent on price, and buyers will regain confidence that they're not buying at the peak. It's the recipe for a healthier housing market ahead. So, with major changes brewing in both rates and prices, how can you take advantage? Well, here are a few action steps. For home buyers, start getting your ducks in a row right now. If you've been waiting for lower rates, get pre approved with the lender so you're ready to move quickly when rates dip. Keep an eye on mortgage quotes over the next few months because we could see incremental drops as we approach that 6% threshold. Also, stay informed on local inventory. More choices and motivated sellers means you might score a great deal. Have a target price in mind and be ready to negotiate in a buyer's market so you can ask for seller concessions such as covering closing costs, rate buy downs, etc. Homeowners, if you're looking to sell, be realistic with your pricing. With more competition and lower rates luring buyers, a slightly lower listing price, well, that could attract multiple offers, whereas overpricing just might leave your home sitting there. It might be wise to sell sooner rather than later if you're in an overheated market. Prices could soften a bit more as inventory grows. On the flip side, if you plan to stay put, but you want to refinance, start prepping your finances, like your credit score and the documents. The window for refinancing into a rate in the fives may well open in 2025, and you'll want to jump on that opportunity to save hundreds on monthly payments. Finally, don't let this news catch you off guard. Markets can change fast. 6 months ago, everyone thought we'd be stuck with a 7% mortgage indefinitely. Now, there's a real chance of relief on the horizon. So stay tuned to credible updates. We've got you covered here on this channel and be ready to act when opportunity knocks. Now, this isn't just some trivial forecast. It could mark the beginning of the most significant housing market shift in a decade. The possibility of falling mortgage rates and a buyer friendly market means millions of Americans might finally get their shot at home ownership or, at the very least, a much cheaper mortgage much sooner than they imagine. But many people won't realize these changes are coming until it's splashed across the headlines or until rates actually drop at their bank. So let's not keep it a secret. Sound off in the comments. Are you planning to jump into the market if rates fall below 6%, or are you waiting for prices to come down even further? We want to hear your take. So, like this video and share it with anyone you know who's been frustrated by high rates because knowledge is power. And believe me, they'll thank you when they've saved thousands on the mortgage. And of course, subscribe to the Financial Freedom Network for more updates like this. We'll keep you ahead of the game on everything: housing, interest rates, and personal finance so that you can make the best decisions for your wallet. So until next time, thanks for watching, and here's to your financial freedom.